All right, let's get right into it. The headline you're seeing out of the Korean market, it's a trap. It's masking a really critical defensive rotation into the memory sector leaders, and that gives us a direct vector for the US Open. So take a look at this. You can immediately see the conflict, right? On the surface, it looks like a positive close, but underneath the market's internal mechanics, they're flashing a major warning signal. We've got to dig into what's actually going on here. So first up, signal versus the noise. We're going to deconstruct that headline number. And here it is. That's the KOSPI close. This is the positive, shiny number that's masking the underlying reality. But then you get this, the immediate contradiction. The Nasdaq, Korea's tech and growth-focused index, actually finished down. This negative print is all the proof you need that the market is fragmenting, not expanding. So this brings us to the crucial question. Why is the market fracturing? I mean, why is capital flowing in two completely opposite directions at the same time? And boom, this visual tells the whole story. The money didn't spread out, it concentrated. I mean, just look at those massive green blocks for Samsung and SK Hynix sitting in a sea of red. Capital literally fled the broader market and went to hide in the memory giants. Okay, now we're going to look at the capital concentration mechanism. It's all about following the smart money. The data just doesn't lie. Look at this. Institutional capital, the smart money, pumped over 836 billion won into the big KOSPI leaders. At the same time, they were pulling over 371 billion won out of the broader Nasdaq. Make no mistake, this is not a rally. It's a defensive reallocation. There's actually a name for this mechanism. Selective liquidity absorption. It's a classic defensive pattern of capital preservation, not expansion. What this tells you is that institutions aren't betting on new growth. They're hiding in companies where they see earnings certainty. Now for the important part, connecting the AI supply chain. How we get from that Asia signal to a US vector. And right here, this is the physical hardware at the absolute center of this whole story. The money flowed into Samsung and SK Hynix because they are the world's main suppliers of HBM3E. That's the high bandwidth memory that is the essential fuel for the entire AI revolution. This is the exact hardware that giants like NVDA are buying up in massive quantities. So the takeaway here is absolutely crucial. Smart money in Asia is making a huge bet that demand from US AI leaders is going to stay explosive. That makes these strategic tech partners the safest place to park their capital. It's an incredibly powerful leading indicator for us. But, and this is a big but, this signal from Asia isn't guaranteed. It's about to face a major test at the US Open. The US March ISM Services PMI. This is the high-impact data release that could completely break this entire narrative. You have two paths. If it comes in hot, that signals cost pressure, which threatens tech valuations and could kill this signal from Asia. But if it comes in cool, it could ease that pressure and just add more fuel to this fire. So how do we play this? Well, the key takeaway is simple, and it's our core principle around here. Do not trade the headline. You trade the supply chain. All right, let's move to the execution phase. Here are the no-compromise price levels for engagement tonight. Okay, for NVIDIA, your pivot is 1240. Simple. A sustained break above that level validates that the memory signal is translating directly to hyperscaler strength. A break below, and the signal has failed to cross the Pacific. And for Micron, the pivot is 124.50. A break above that confirms this whole supplier-driven narrative is intact, but if it fails there, it might suggest that the memory rally was just an isolated Asian event. But even with these levels locked in, there is one final variable that can override this entire thesis. And here it is, the final boss, the US 10-year yield. You have to watch this. If yields break that key resistance at 4.35%, the valuation pressure on tech could become absolutely immense. And that would invalidate all the bullish signals we're seeing from the supply chain, no matter how strong they seem. Which leaves us with the one question that will define tonight's session. Will this clear fundamental signal from the AI supply chain be strong enough to fight off and override the immense pressure from the macro environment? We're about to find out. We'll be watching the Open at 0630 EST to see which one of these forces wins out. Stay sharp.